Hello, Renee Hahn here, serving Naples and surrounding areas as your local Naples real estate expert. I like to bring topics that are pertinent to future and current buyers and sellers to make sure that you are informed before embarking on a big investment like a home purchase. We're going to talk today about closing cost and what to expect whether you're a buyer or a seller. We're going to start on the selling side. But before I go there, it's important to keep in mind that closing costs in Florida or any state for that matter can add a significant amount to the total home price that you're going to pay as you are selling or buying a home. And so it should be anticipated before moving forward and accepting and closing on a deal. A good rule of thumb, but not always exact, is that on the seller side, you should assume that your costs are going to run you about 6 to 8% of the overall home sales price. The big piece of that cost is commission, which we'll talk about in a moment. And so that typically runs about 6%. On the buyer side, however, you should look at about 1 to 3% of the total purchase price in closing costs for you. That can vary, that range varies based on whether you are taking on a mortgage or not, because obviously if you're going to be taking on a mortgage, there's some additional requirements, additional costs that come with that in terms of fees. So let's jump into the seller side here. As I mentioned, the biggest piece of that cost, if you will, for the seller in the real estate transaction is commission. So the seller pays the sales commission, and that is predetermined at the point of the listing agreement between the broker and the seller. Typically, half goes to the buyer's agent to cover them bringing the buyer, to cover the work that they'll do in closing and managing the buyer side of the transaction. The other side goes to the listing agent to pay them for all the services they provided before the property was listed, during the listing process, and ensuring a smooth closing. So it's important to talk about what those additional costs are, but remember that sales commission is the biggest bucket for the seller. The next one for the seller is title search fee. This fee covers a thorough property search to ensure there isn't anything wrong with the property so that a title agent can issue a clear and free owner's title insurance policy. Pretty important when purchasing a home. This search is essential for detecting potential legal problems and financial headaches in some cases, such as maybe the previous owner had debt, and because of that debt, they had a lien being placed against the property. It could be easement and encroachment issues on the property. It may be mortgage fraud or falsified or incorrectly filed deed information. The cost for the title search fee is generally between $100 and $500. Lien search. The lien search is done through the county court records and searches for any property liens that must be cleared before the buyers can close on their purchase. The step also typically includes searches for any unrecorded property issues like expired permits or code violations. If any of these issues exist, it is the seller's responsibility to close them out. Keep that in mind. I typically will try to do some upfront searches on things like permits to the extent that we can search for them online for my clients to try to minimize any surprises we may have. The costs for the lien search generally run between $100 to $500. The next one for the seller is the deeds transfer state tax. That's a mouthful. That is a fixed amount. So the way it is calculated is if you take your purchase price and you divide it by 100, multiply that by 0.7. So 0.7 cents for every $100 of the purchase price is what is paid for the deed transfer state tax, and that is covered by the seller. The next one covered by the seller is estoppel fees. So estoppel fees are charged by the entities providing financial reports used to determine what the balances are for things like taxes, association fees. The entities providing the reports set their rates, and they charge anywhere from typically $250 to $500. Again, these are fees that are generally passed on to the seller at closing. They're paid for up front by the closing company and then obviously handled as a reimbursement line item on the closing. If there are times, if there is a rush that's needed on the buyer side to rush the estoppel The entities will sometimes have an additional rush fee that sometimes buyers will cover the cost of. The next and last one that's only on the seller side, because there are some additional ones that are shared, but that is FIRPTA withholding. And FIRPTA is foreign investment. This is a foreign investment property tax that would be owed by the seller if they are not U.S. residents. You will want to consult your CPA to discuss this further if you think this may be the case. And hopefully, if you're a seller, you've already did your due diligence before you purchase the home. But just in case you're not, reach out to a CPA. They can discuss it further. Again, it is only in play if the current seller is a foreign and not U.S. resident. Worth noting, if the buyer is purchasing a home from a foreign owner, the closing company must be flagged. I can't stress this enough. They've got to be flagged to ensure that withholding happens from the seller at closing. Otherwise, this tax obligation passes on to the new owner, and no one wants that. It's a significant tax, and so we want to make sure the seller is obligated to disclose that they're a foreign owner. And once a buyer and their agent become aware, you should immediately disclose that to the closing company so that appropriate steps can be taken to withhold that amount at closing. A shared cost, settlement fees. I shouldn't even call this a shared cost because it's really a cost that's not shared. It's just it's charged to the seller side and the buyer side. This fee is charged by the closing company. That could be a title company. If a title company is doing the closing, it could be a real estate law office. Each party, so buyer and seller, are charged a separate fee. That fee covers the work that the closing company is doing on your behalf to get the deal closed. It can range from anywhere from $500 if you're using a title company, and I've seen some of the law firms charge upward of $2,500. Again, it's set by the closing company. And when you are deciding who's going to handle your side of the close, you can ask what that fee is up front, and they will be able to communicate that before you make final decisions. Again, I always collect that for my clients as a part of the process to get things going. Association fee is another one that I have, seller and buyer, because it all depends on what's been paid by the current owner to the association to date and what period of time that those fees covers. And that will determine whether credits are owed by the buyer or the seller. The other thing I want to point out related to association fees, this could also include any outstanding assessments from the association, depending on the status of the assessments. So if you are a seller or a buyer and you're aware that there could be some future or current outstanding assessments, make sure you talk to your real estate agent. The other association fee that is included in this that is paid for the buyer side is if the association has a transfer fee. Many of the associations have started to adopt this as a way to build reserves up so that they don't have to go to their current owners to ask for money for the reserves. And that is paid at closing by the buyer. When I've seen transfer fees, I see them anywhere from generally $1,000 on up. And again, it is set by the individual association in terms of what they want to charge for this fee and is handled at closing. Another shared area is property tax. Much like association fees, it depends on what's been paid, what period of time that covers, and related to the closing date, because obviously the seller owes property tax up to the day of closing, and the buyer owes for everything due after that. If taxes have already been paid by the seller that cover the period beyond the closing, then the buyer may owe a credit, or vice versa. If the taxes haven't been paid for the period of time that the seller owns it, they may owe a credit to the buyer at closing. Keep in mind that in Florida, property taxes are paid in arrears. Wire fees. If either party is getting a wire as a part of the transaction, not a wire into the closing company, because you'd pay whatever fees that come with that, usually through the wire initiator, but these are wires that are paid from the closing company out to the buyer or seller. And if they have a wire, typically they pass a wire fee on. It's usually under $100. Now we're going to start flipping over to the buyer side. But the last area I have on here that could be an it depends is owner's title insurance. Why do I say it depends? Because it depends what contract you're using. In Naples, we use the NABOR contract. And in the NABOR contract, NABOR stands for Naples Area Board of Realtors. It specifies that the buyer selects the escrow and title company, and the buyer pays for that. In Lee County, however, that is an open item on the contract that could be determined that cost could go in either direction, so it becomes a negotiated item. Property inspection. On the buyer side, I always encourage buyers to get inspections. If you don't wish to get an inspection, obviously this isn't a fee that you'd have to be responsible for, but I strongly encourage it. Depending on what inspections you're going to get, the fees typically are anywhere from $500 if you're doing a basic inspection with no additional add-on inspections, and it could go close to $1,500. Again, it covers the cost. It's paid to the inspection company. I don't see it very often collected at closing. Most of the time, the inspectors want that paid at the time or in advance of the closing, but it is considered a cost, so I want to include it on here as you start to think about your costs as a buyer. The next one is intangible tax. This is a fixed fee, and the way they determine what your cost will be, because it's paid as part of having a mortgage. And so they take your mortgage loan amount and they calculate it 0.002 cents per thousand of the mortgage loan amount, not the purchase price, but the loan amount. Again, it's collected at closing. If you don't have a mortgage, this would not be a cost for you. Document stamps. This price can vary dramatically, and it's the cost paid to a local county when the deed transfer is recorded. So it's stamped. It's when the transfer of the deed happens and gets recorded. For all Florida counties except Miami-Dade, this is a fixed calculation of 0.35 cents per 1,000 paid for the property. So you take the purchase price, divide it by 1,000, multiply that by 0.35 cents. For Miami-Dade County, it's actually 0.30 cents per 1,000 for single family homes. And then there's a surcharge for other property types. The next buyer cost is homeowner insurance. If the home will have a mortgage on it, the lender will typically require for 1 full year of insurance to be paid for upfront. And then that lender starts to accrue in the mortgage payments for future insurance costs for subsequent years. If you are not taking out a mortgage, it's up to you whether you carry homeowner insurance. But obviously, if you decide not to, you have to be prepared to take the risk with that. Survey fee. The survey helps verify the boundaries of the property being sold and helps identify if there are any issues like encroachment. If there's a lender involved, much like we talked about the last category of cost, a survey will be required. So otherwise, like title insurance, that is optional for the buyer. Again, some lenders will require surveys of the property before they'll even release the loan to a buyer. Costs can vary, but it depends on the size of the home, the location. Generally, I'm seeing them price out about $500 to $800. Again, the closing company arranges for that and typically collects the reimbursement at closing. Appraisal fee. This is another one. If you wish to have an appraisal and you're a cash buyer, you'll have this. Otherwise, if you're a cash buyer, you may not have an appraisal fee. But if you are going with a loan, a lender is going to require you to have an appraisal. They obviously want to make sure if they're going to put forth money for a property in your for you, that it's going to be valued at that in case anything needs to happen to the property. The appraisal fees are typically running between $300 and $500. Again, that's set by the appraiser, and it also is based on the value of the home for loan purposes. So appraisal fees, again, are on the buyer side. Credit fee. If your lender runs a credit report as a part of their approval, some of those lenders may pass on the cost to the borrower for pulling the credit information. And again, this fee is set by the lender and it can vary. Now, if you have a mortgage, we already talked about owner's title insurance. If you have a mortgage, the lender is also going to require you to pay for a lender title insurance. That will require the buyer to purchase that insurance policy on behalf of the lender. And it's in addition to their owner's policy. It protects the amount that the mortgage company lends out in case the ownership of the property is contested at some point. If someone else claims ownership of the property after the buyer closes and the judgment is legally upheld, the lender's title insurance policy will pay the lender for the outstanding amount they're owed on the mortgage. So again, you can see why there's a range of 1% to 3% of the buyer side, because many of these things we've been talking about are only costs that are present if there is a mortgage. Deed recording fee for buyers. Florida counties incur a fee for registering the sale and transfer of the property. It's charged by the city or county, depending on where you're purchasing, and their recording office. The fee is to record the mortgage. So again, this is another one that is if you have a mortgage. So it's a fee to record the mortgage in the public land records. And typically you'll see cost of something like $10 for the first page, maybe a lower fee like $8.50 for every subsequent page, but they'll base it on how large the mortgage package is. And again, you can get those estimates from the closing company. Loan origination fees. These are fees that are charged by the lender to process and underwrite the loan. Generally, you'll see this cost be anywhere from 0.5% to 1.5% of the loan amount. Private mortgage insurance, also referred to as PMI. This is a fee charged by lenders when loans exceed certain thresholds. PMI helps safeguard the lender against losses in case the buyers cannot repay the loan, because obviously the more that a buyer is putting down on the purchase, the risk to the mortgage company goes down. If you're not putting a certain amount down, most of the time it's at least 20%, then you may be charged private mortgage insurance to help protect that investment for the loan, the mortgage company. The last one is mortgage points. Again, this is obviously tied to if you're taking out financing on the home through a mortgage. Buyers may incur fees known as discount points at closing, which are paid directly to the lender in exchange for a lower interest rate on their mortgage. So essentially, the buyer is buying down their interest rates. If they choose to do that as a part of their mortgage, then they would have these mortgage points that would be due as part of their closing. So those are all the fees. The types of fees, in terms of just the sheer different ones, number of different ones, there are more on the buyer side, particularly if you're doing a mortgage, but the cost is greater for the seller when they're selling. That's obviously factored in to their decision on the front end when they're listing their home as part of their asking amount, if you will, their listing price, although that should be set based on market value, but it's something that they've obviously got a plan for. So I hope that this was helpful to you in understanding the different closing costs that you may anticipate, whether you're on the buying or selling side. If you ever have any more detailed questions about this, as always, feel free to give me a call, Renee Hahn, 239-287-2576, or go to my website at yournaplesexpert.com. Thank you and have a wonderfully blessed day.